Well, we got existing home sales, and all I have to say is nailed it. We have been talking about existing home sales breaking below the bottom. We talked about this several months ago, and we were right once again. But the numbers behind the numbers are interesting and worth having a discussion about. So, what actually happened with existing home sales this morning? Last month, if you don't recall, we did 3.88. Expectations were that we would repeat that number, 3.88 by the experts. I had forecasted and shared with you that I thought we would go lower, and we did. We went down to 3.84. If you are in the real estate business, especially paid on transactions, I do not have good news for you. I think next month will be lower than this month. This month, 3.84 million takes us all the way back to 2010. 2010, the depths of the Great Recession. 2010 was a bloodbath. Right? That was the year a lot of real estate traded hands for pennies on the dollar. So yes, we went all the way back to existing home sales 2010. But what about price? What about price? Price, of course, was down month on month. I think it was down something like 2%. Although we don't talk about month on month, it is the seasonal norm. As you look at the charts, we go down this time of year. The important number for me is year on year. And once again, we are up. We are up 3% year on year. Again, if you don't remember my call from way back when in January, I had assumed that we would be flat year on year, and I still expect us to be flat. So I expect us to give up some of that gain and end the year basically flat. So again, pretty interesting. But what about the numbers behind the numbers? First-time homebuyers down to 26%. And that's a cycle low. It matched August. If you go typically first-time homebuyers make up somewhere between 40 and 42%, sometimes as high as 44%. So we are sitting at the very bottom of this. And why is that? Well, lock-in. We have very low turnover. The move-up buyer is dead. All the things that I have been telling you for years is still going on, and it's showing up in the numbers. What about investors? Well, investors came in at 19%. That was actually up 1% from last month. Again, the market we are in is horrible for first-time home buyers. And frankly, it's pretty good, if not great, for investors. Now, why do I say it's great for investors? A, we don't have to buy. B, it is becoming a lot easier to find motivated sellers. If you didn't watch that conversation I had with Omar last night, I think it came out at 5 o'clock, or maybe my presentation with Matt, the lumberjack landlord, yesterday, there's a lot of people that are going to get motivated to sell. And you could do creative financing. You could get lower prices. It's coming. Motivated sellers are out there. And Omar talked about his phone basically blowing up the last couple of weeks because people want to sell before the end of the year. So again, it's a horrible market, and it's only getting worse for first-time home buyers, but it is getting better. It is getting better for investors. We don't have to buy. We can write lots of offers. We can chase. We can find. We can put together a deal that is from a motivated seller, somebody who doesn't want the asset. Moving forward with the numbers behind the numbers, 30% of transactions were cash. Cash. That's crazy. 30% were cash. 3 out of 10. Distressed sales, 2%. If I really wanted to be negative and go after a nasty headline, I could have said distressed sales went up 100%, because they did. They went from 1 to 2, which is a doubling. So again, distressed sales up 100%. I expect some folks to lean into that. And then probably the most important measure, the one that tells me I know we're on the right course as a community, is days on market. Days on market last year were 21 days. Now they're 28. And again, what does that mean? We're going higher. We're in a buyer's market. I don't know what to tell you. Days on market's going up. Demand is pulled back. First-time home buyers can't. This is the market for investors. You got to do the work. You got to talk to a lot. You got to kiss a lot of frogs, or whatever the saying goes. Folks, do the work. Do the work. And then, very interesting, I don't understand how the median home sales can keep going up on low volume. Well, folks, you have to understand how median is calculated. And I think it was a year, it might have been 2 years ago, I showed on a whiteboard how you could do, 100 transactions, then you go to 70 transactions, and because of what inventory left, i.e. the low end, the prices went up. Guess what's happening, folks? That's exactly what's happening. I talked about it. I got a lot of grief. Man, people do not understand median. Why do I say this? If you simply look at the data from NAR, which you can go get yourself, it's public information. It just came out this morning at 7 a.m. Pacific. Sales of $1 million properties and above are up 8.3% year on year. So if you line 100 listings and then you wipe away 20 of the low end and 10 of the high, what happens? Median goes up. So if the high end is doing well, what about the low end? Well, if you look at sales between 100K and 250K, they are down 9.7%. So we have lost the low end. We are transacting less at the low end, and we are selling more $1 million properties. Hence, the median goes up, as we have talked about a lot. Let's do a favor. Let's stop and let's congratulate some people that are doing the work. Hunter, congratulations on getting your next deal. Your card will be in the mail. And Vatsal, congratulations on getting your golden ticket. I wasn't sure I did this one already. So if I did, I apologize. We're doing it again, but the card will go out today. So Hunter and Vatsal, congratulations. They already got stamps on them. They're going out this morning. Continuing with the theme on real estate, mortgage applications are down again. They are down 5%. Rates matter. Rates matter. And again, I am really starting to think we might be in a world where we have 7% mortgage rates in 2025, which of course, going back to existing home sales, it's going to suck. It's going to drive the first-time home buyers to a new low. Again, it matched the low this month at 26. It may go as low as 25, maybe even as low as 24. But investors, we will be there to pick up the pieces because we are, again, we don't have to buy. We just we write great offers, and we continue to do the work. I don't know if you saw this, but Paul Tudor Jones was out talking big time yesterday. He's basically saying all roads lead to inflation. Paul Tudor Jones is long gold, long Bitcoin, long commodities, long hard assets. He also highlighted that he believes young people, probably millennials and Gen Z, he just said young people, are using the NASDAQ as a hedge for inflation. What I do when I hear things like this, I just smile. I'm like, we're going to do real estate. If we got all roads leading to inflation, we're going to do real estate. We are going to get 30-year fixed rate financing. We are going to put 20 to 25% down. We're going to let somebody else pay off our debt, and we are going to get a leveraged return. Again, go get the 54-year spreadsheet and look how much inflation can help you. I don't remember the exact numbers, but these will be close. Over the course of, well, I don't remember what it was, 20 years or so, real estate on a nominal basis was up like 1,100%. Adjusted for inflation, it was more like 100%. So again, inflation's a feature, not a bug. I keep telling you that. So Paul Tudor Jones believes that the Fed must cut to lower the debt burden on the on the government. All right, the fiscal policies is out of whack. And again, he is saying all roads lead to inflation. Don't know if you saw this, but Starbucks had their pre-announcement. They pre-announced again, same store sales down. They are down big in North America. They're down 10%, double digits. No bueno at Starbucks. They have also suspended guidance for all of 2025. If you guys don't remember, they just got a new CEO, and he's basically saying, it's going to take a year to fix this thing. So again, they also raised the dividend. They're basically trying to give their investors a reason to stick with them. So again, Starbucks down 10% North America, their largest market. Pretty crazy. McDonald's, I don't know if you saw this, but apparently their quarter pounders, one of their suppliers, has had some quality control issues, and they've had to suspend the quarter pounder at several states in and around Colorado for an E. coli breakout. That ain't good. That's no bueno. We did get earnings from CoStar Group. CoStar Group puts on a lot of commercial real estate. They missed on revenue, probably not shocking, but beat on earnings and gave a weak guidance. Again, folks, we are simply not trading most of the market. Most of the market is not trading. It's only the Class A stuff, the stuff that Ken McElroy, Grant Cardone, and others go after. The Class B and Class C stuff where mom and pop, myself included, play, it's not trading yet. Just simply not trading yet. I do want to talk about Gen Z, somebody in Gen Z who is in the trades. Earlier, I think it was last week, might have been the week before, I put out some content about Gen Z having the possibility to enter the trades and also create a brand. I want to give you somebody that I follow just as an example. If you are a Gen Z, or if you have maybe kids or family members and you want to see what I'm talking about, do yourself a favor and follow Mary Tiles, Texas. Mary Tiles, Texas. She lays tile, obviously, in the name. She does a lot of bathrooms and whatnot. Again, she is Gen Z. She's recording content, and this is what I'm talking about. Gen Z has a very unique opportunity in front of them. I don't know if you're sensing it, but in the real estate market, I've said it a couple of times in different conversations, I think it's going to be worse in 2025. When I say worse, remember the other side of worse is better. What do I mean by that? It's going to be worse for a lot of people. If you are a seller, it's going to be a tough market unless you have like the perfect property. If you're a first-time home buyer, it's going to be tough. There's just no inventory. Flip that over. If you're an investor, 2025 is going to go down as a pretty good year. You and I simply don't care about the cost of capital. We write deals that make sense with whatever today's 30-year mortgage is. We don't get arms. We don't gamble. We don't bet on appreciation. We simply continue to do the work. Continue to do the work. And somebody says that Mary might be a millennial. Maybe. I thought she was young, but again, I'm old, so maybe. But the idea stands. Mary Tiles, Texas is a great example of what Gen Z or the young folks could do. If you get into the trades, document your story, build a brand. Nothing special. I think she does everything with her phone, so easy to follow. So again, 2025. For investors, I think it's a pretty good year. We have less competition. We find it easier to find motivated sellers. And if you've been paying attention, it is easier to get creative financing. Creative financing is a wonderful strategy when you have sellers who have a price in mind, but it doesn't warrant today's market. You can get seller financing done, 50, 40, 10, seller carries, whatever it is, and make the numbers work, right? You want yesterday's price? Great. I want yesterday's rate. So again, it is going to be pretty interesting. I do want to talk about school real quick. We had 2 new members of school yesterday. I want to shout out Christine and Robert. Christine and Robert, thank you for joining. Don't know why you haven't joined yet. 67 cents a day. We've got over 300 people in there moving and grooving. I do want to ask a question of the folks in school. We are starting to get to a size where we can form, I don't know if you want to call them little masterminds, little groups. I would love to see the folks in the school community create little groups for maybe short-term rentals, midterm rentals, flipping, maybe even ladies of ORAT. Would love to see things of that nature. We did have, I believe it was Michael, might have been Matt, I think it was Michael, send out a note yesterday looking for licensed real estate agents. Again, I think we're getting to a point, folks, where we can start to put some groups together with like-minded individuals. We can help each other, motivate each other. So if you fall into a group that you would like to see if there's others out there, put some notes inside school, and let's see if we can't get some more networking, some more help with all of that. And as always, if you find a topic that you want covered, just let me know. Again, part of school is we will bring other experts in to have those conversations. And of course, when you join school, remember, you've got to get to level 2 to unlock 6 hours of creative financing, and level 3 for a 10-week boot camp, which again is a huge, huge value. So again, folks, I hope you have an amazing day. We are going live with Dion and Lumberjack here in about 14 minutes. We're only going to go for a half hour. I have some family duties I have to do today, so we usually go for an hour. We will only go for 30 minutes today. But get ready. Dion and Matt on deck. All right, everybody, take care of yourself. That's the daily financial news. Peace.